how much are externals, the external situation, a factor? Whether it's a Trump administration, and whether he goes whole hog on China tariffs, and also the evolution of China's economy now that we have a stimulus program. How closely are they looking at the global environment?
Well, I think it's certainly something that they're watching. It's very hard to make a game plan for what seem like fairly binary kind of risks, particularly around trade policy. I mean, I think the way that the RBA has played this in the past, and certainly we can look back to previous, tariff skirmishes in the previous Trump administration, is that they kind of watch and worry on the financial side of things. So they're watching any volatility that might be induced in the Australian dollar. But we haven't actually seen either tariff-related shocks or more recently kind of China growth-related issues transmit to the domestic economy in a big way. We've had a very weak period for China growth, of course. Stimulus has kind of disappointed in the sense of where the rubber hits the road on fixed asset investment and real estate investment in China. But it just hasn't really made a big macro imprint on the Australian economy from a growth or labour market perspective. And we think that's generally because weak China growth hasn't been weak enough to make commodity prices fall. And it's really that commodity price channel where if there's going to be an impact on the Australian macroeconomy, that's going to be most visible there.
Ben, I'm not sure if it's a coincidence or not, but 65.80 where we are on Aussie right now is at around a 2-month low or so that's on the back foot. Similarly, right, we're seeing the same sort of positioning in terms of renminbi, whether it's onshore or off, right? And I'm thinking, we've got the election in the U.S. a day away. A lot of currencies, EM currencies, are on the back foot. And the worry, obviously, is if Trump, then stronger dollar, maybe even if Harris, a stronger dollar, right? Because both aren't going to help the debt or the deficit in any meaningful way, I don't think. Would you say that the Aussie is more vulnerable or the most vulnerable in G10 to a strong dollar rising from whoever wins the U.S. election?
Well, I think there was definitely a sense that contingent on the election outcome, we thought a Trump win, and particularly a Trump win where there was a kind of compelling mandate, red sweep, etc., would see Aussie being the most vulnerable. So that's both from the avenue of being high beta to any tariff risks that were to play out, but also vulnerable to a repricing in rates from the implications of looser fiscal policy. Now, markets, in our view, are essentially discounting or assuming the Trump red sweep scenario is a relatively higher probability, particularly in FX and Aussie dollar and CNH specifically, than maybe some of the polling or the betting markets suggest. So I would say contingent on the Trump win, Aussie is more vulnerable, but it feels like, to your point about performance recently, more of that has already been priced almost preemptively because people have viewed Aussie shorts as a fairly kind of safe consensus way to express the probability of tariffs in the Trump scenario.